lot of people don't know what a reverse mortgage is. They're confused on how do they apply it, what's the benefits. So you know what, today's video, that's what we're going to talk about, reverse mortgages. But like always, before I begin, hold on. Bing! Hey guys, it's the real Mr. Marcelle, aka your favorite loan officer. Boom, make sure you follow me on YouTube. And I just wanted to let you guys know I'm here to help you. So I want to tell you guys about reverse mortgages, why I like it, the benefits, how you can use it, and the applications, and all about it. Alright, so what a reverse mortgage is usually for people 65 and older. Alright? Now the reason why it's of that older age group is because that's when the bank is like, hey, they need it. They can actually use it and it can be helpful. They tend to be used on people who are elderly and need extra money. So what does that mean? That means if you're elderly, you need some extra money, a reverse mortgage may be for you. Now, you have to be a homeowner. You can't be living in an apartment trying to get a reverse mortgage. It's not how it works. It's for someone who currently owns a house and they want to tap into some equity of the house and they don't want to pay for it right now. What that means is you don't actually have to make payments on the money. What they do is the bank will take out some money and put the payments aside for you and make the payments. So technically you don't pay anything, but it does eat out the equity from your house. Now, the reason why reverse mortgages have such a negative stereotype and stigma is because a lot of people in the banking industry was using it the wrong way, and they would end up getting elderly people foreclosed on their houses because they didn't know the replications and the whole parameters of how to work, how to use it, and they were actually losing homes. Yes, people were losing their homes, and instead of the house getting transferred to the family member, it was getting transferred to the bank, foreclosed, and then losing it. So, for example, it was a situation where I was working with this customer, we'll just call him George, and he was nervous because George knew about a friend who the same situation happened. His grandmother was sick and they wanted to do updates to the house so the grandmother could stay in the house and live comfortably. But what ended up happening was the bank ended up taking the house because no one told the family how it worked and they didn't understand the whole parameters about using and owning a reverse mortgage. They didn't understand what could happen. So the bank ended up foreclosing the house. So when George came to me, he was like, Malcolm, hey, I want to do a reverse mortgage, but I want to make sure no one's going to take my grandmother's home. I just want to access some of the equity. So the house was worth $600,000. It was actually paid off, and he wanted to tap into about $100,000 equity. So what we did for him is say, hey, you know what? We'll give you access to $300,000. You don't have to use it, but just know that it'll be there. You don't have to make any payments. Payments will come from the money, and you can take your $100,000 up front. Boom, you use it, fix up the bathroom so your grandmother is able to have her nice new shower, because you know when you're elderly it's kind of hard to use the showers that we have. So that was one thing, and then also we were able to give him a little extra money in case he needed. Now he doesn't have to take it. If he doesn't take it, you pay nothing on that money. You just pay the money on the $100,000. So a lot of people don't realize that, yes, you can actually get access to the equity and not take all of it. So for example, he only took out $100,000 he wanted. We gave him $300,000 and the $200,000 stayed almost like a line of credit that he had access to. But it wasn't something that you take, you pay back. It wasn't something like that. It was more of take the $100,000, the bank will cover the payments for it, and the $200,000 will just stay there as emergency money if you need it. If you do not need it, you pay nothing on the money. And he was fine with that. And what it allowed him to do is allowed him to get the, like I told you, the bathroom for his grandmother. But the biggest thing is I showed him how to do it properly. And we were able to do that without having to make people feel like they're losing their house. I really want to give that and convey that message to you, that when you become a loan officer and you're dealing with people's finances, they're trusting you. So you have to lead them on the right path to make sure. Now, unfortunately, George did not close with me due to other issues, but hopefully soon we'll do this and then I can explain to you about the whole process of doing a reverse I'm sorry, Chester's making so much noise. I'm going to wrap this video up, guys. It's the real Mr. Marcelle, aka your favorite loan officer. Hope you guys are following me on YouTube, TikTok, and Instagram. If you have any questions, make sure you message in the comment section. And I have a whole bunch of other videos for loan officers or about FHA, conventional loans, and stuff like that. Thank you, guys. You guys want more of this? You guys want more of these videos? Then make sure you like, subscribe, follow, and go see my other uploads. There's a whole bunch on this channel for you guys. I want to make you guys millionaires. Thank you for everything. This is the real Mr. Marcelle, and see you next week.